now we're talking about how do we use the indirect method to calculate the cash flow from operations. And this is where we're going to spend not all of our time, but a lot of our time this unit. So this is important. Please write down these steps. You're going to want to have them handy. All right, so we're going to start with net income. We always start with our accrual basis net income. Where do we get that? We pull it right off the income statement. We go to the current year's income statement, grab our net income number. That's where we start. It's always number one. I usually ask this as a multiple choice question. What's the first step of calculating operating cash flows using the indirect method? The answer is start with net income. A lot of people get that wrong, so I'm telling you right now, if you're watching this video, you got a heads up. If I ask that question, start with net income. Then we're going to add back our non-cash expenses. So if you think about it, we're trying to take our net income, our accrual basis net income, and create what would our cash basis net income have been. So expenses like depreciation expense decrease our net income. Our accrual basis net income is smaller if we have depreciation expense because it's an expense. Revenue minus expense equals net income. So we're going to add that back because there was no cash involved in depreciation. Remember, when we calculate or when we book our depreciation entry, it's debit depreciation expense, credit accumulated depreciation. There's no cash involved in that. Other things would be things like a gain or loss on the sale, the disposal of equipment. And the reason for that is because if we collect cash when we dispose of fixed assets, that's going to go down in the investing section. So the cash is already accounted for in the investing. So that makes the gain or loss that we book a non-cash expense that we would add back. Amortization expense, we would add that back as well. Okay, and then after we've added back the non-cash expenses, we are going to add or subtract changes in the current assets and the current liabilities. So we're going to look at all of our current assets and current liabilities, except we're going to exclude cash and marketable securities, okay? Because we're basically, the marketable securities are showing up down in the investing section, and the cash, I mean, we're reconciling cash, so we're not going to include cash. But all of our other current assets, or short-term assets, and our current liabilities, we're going to look at the change, and based on if it went up or down, we're going to add or subtract. Now you're probably saying, well, how do I know when to add and when to subtract? And if you're asking that question, you are definitely going to want to watch the next video, because that's when I'm going to tell you how to know whether you add the change in current assets, add the change in current liabilities, or add the change or subtract the change in current assets, or subtract the change in current liabilities. All right, once we've done those three steps, we add it all up, and that becomes our cash flows from operations. So stay tuned for the next video. I'm going to tell you how to add or subtract the changes in these short-term or current assets and current liabilities. And then we're going to start actually building our statement of cash flows. All right, see you then.